Do we have the ways to predict the market? Is there any technical parameter to analyze and invest? We have financial expert Mr. Anunay Kumar with us. He will guide us through. Anunay Kumar, the screen is yours.
So I think one of the parameters that we follow is the price to book, which is what we spoke and we showed you as well. Because to me, the price to book is a better parameter simply because it talks all inward, intrinsic. I can exactly see what is the book value, and I can exactly see what price am I paying for that book value, and that's much easier for me to get a sense. Well, market use multiple ways of looking at it, but I think price to book is far and more, I would say, promising. If I go with that price to book, then I would say at 3.9, we should be exiting the market because every time we are closer to 3.85, I've seen the market retracing. That's fact. But now, if I take you back some, 15 odd years when I was, and if I talk about myself, having worked for Citibank, ABN AMRO, and Royal Bank of Scotland, and have managed a large family offices and the large books of the people. I can tell you that in 2003-4, we used to use the parameter called price to earning. And that parameter would tell me that every time you get closer to 17 on a PE, you will exit the market. Every time you come to closer to 13 on a PE, you will enter the market. Now let's go back on that same parameter. If today I will go with a 17 PE, then ideally I would be sitting on cash for last I don't know how many years because P of the market consistently is to northwards of 23. So many of these numbers when we talk to you all are the indicators. They are not the Bible. Because if the economy is growing, ideally you should have also asked me that at 25,000 Nifty, why should we should be invested anymore? But for someone to believe 25 or at a Nifty is happening, has to be committed in a Nifty at 20 also, 21 also, 22 also, 23 also. Then only he will be able to see 25 of a Nifty. So my take is rather than getting too much governed by these parameters and the matrices, I will still go back to my original slide, which simply says that don't look for products, look for solution, have vision, have your goals set, put a time frame to each goal. Basis the time frame to the goal, you will be able to onboard the risk in the portfolio. And here a risk would mean allocation to equities. And basis the allocations to equity and the risk, keeping the time frame in mind and adhering to the goal that you would want to achieve, I would say just stay put. Doesn't matter. Sir, if COVID we have seen through and nothing deterred and we are at lifetime high, I seriously don't see anything which can really go worse than a COVID because that was, I think, at least my career of 28 years. I seriously can't think of a situation which could have gone worse than seeing a COVID, which almost kind of made us feel that, I don't know, we actually will be able to survive through this also. So I would say don't get carried away too much with it. Focus on your goals and the timelines and stay invested.
Thanks for your detailed answer. If you have any doubts regarding this or any other financial decision, don't hesitate to book an appointment with our financial experts. The link to the appointment is given in the description below. And also, would you like to know more about finance and investment? Then we would recommend you to attend our live webinar. The link to the webinar is also given in the description below. The webinar is absolutely free. If you like this video, hit like. If you are new to our channel, please do subscribe. Thanks for watching.